The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're going to start the show out like we always do, which is going to be taking a look at the DAX. And as you can see here, hold on one second. I have to do something. Hold on just a second. I have to do a little busy work here, folks. 1 second, because I'm trying to have Sim Only as my guest here this morning at the break, and I'm going to need to get his cell number, and that's what I'm doing right now. But we'll take a look at this NASDAQ chart. As you can see on the daily, we did complete a Gartley pattern on this last run-up like we've had in the stocks. I'll cover the stocks here in a little bit, but I just wanted to get this DAX in there because I know there's a lot of folks that trade the DAX, and I wanted to share that information with them because it's always a nice chart to look at to start the week. And we'll look at the 60-minute next, and you'll see here that we've had a pretty good sell-off this morning. I don't know what caused that sell-off, but at least it backed off, right from that ABCD structure, which is just right at the 78% level. So that's the main thing. Folks, this is going to be a really big week for all of the stuff that we look at as far as the stocks and bonds and everything else, but we've got a lot of things happening. And of course, one of the things that we've been watching really closely has been the Treasury bond market. And I wanted to get this chart up here to show you what we're watching here, because it's a real interesting chart, because we hit some really important spots this morning. In the middle of the night, we've broken almost a full handle, which is almost $1,000. But if we take a look at this Treasury bond market, you'll notice that it still has that possibility to move up to a three-drive pattern at the 153.24, 153.26 level. Now, this morning, just about an hour or so ago, we hit the exact 61% retracement. We had been there for 3 hours, and now we've backed off quite a bit. We need this market, if it's going to reach that objective, we need that to get above the 153.04 level to take us higher, because if we fail from here, we're looking at some really serious ramifications, because all you've had is a rally from July 9th to the 14th, and all it was just basically two handles, which is not even a 382 retracement, which is very, very bearish. So this could be, the last flying Melinda for the Treasury bonds here if we turn. Now, whether that has any effect on the stock market or not, I'm not actually sure. But the one thing I do want to show you that I think is really interesting, because this was published on the internet quite a bit yesterday, and I want to get it up here to let you take a quick look at it here. This is the VIX ever since it started, way back since Hector was a pup. It's back in the 1990s. Let's just put this up here, and you'll see this is the just a second. The old Camerino didn't work. Where did it go? That should do it. Okay, this is the, you'll notice that we've closed lower now than any other time in the last 27 years. So that's a pretty big handle, to remember that that's what it's actually done. But there's one chart here that really explains this, and if you like pattern recognition, I think you're going to like this. This chart comes from our good friend Jim Bartolioni. And we want to put this up here to let you take a quick look at it, because it's a really interesting one. It is a chart on the XIV, which is the reverse of the VIX. That's the reverse of the VIX. And as you can see on this monthly chart, this one goes back quite a ways too. And if you'll notice that you have a 3 drive pattern, just absolutely, it's perfectly symmetrical. You've got drive 1 is perfectly timed to drive 2, and drive 2 is perfectly timed to drive 3, and you have a beautiful ABCD structure in between. So this is telling you that this VIX index is just about ready, to take a reversal. So we want to watch it rather closely, folks. I believe anytime you bought that VIX around that 975, we closed at 950. I believe that using a $1 stop on that is going to be a big profitable item. It already moved, all the way up to 22 at one time and then is backed off again. So it's telling you that it does have legs, but the $64 question is whether it's going to be able to move this thing, much higher. So we'll notice it. But we did have all-time lows now in the VIX, which should be, because we made all-time highs in the Dow Jones, we've made all-time highs in the S&P, and we've made all-time highs in the New York Stock Exchange Index. We have not made all-time highs yet in the IWM. I'll put this one up here to see. It's not very far away, but we couldn't even take out the highs of the previous day on the IWM, which is a little bit of a sign of weakness, but we'll put this up here so that we can take a look at it this morning, and you'll see, where we are. But as you'll notice here, we have completed a 3 drive pattern. Way back in May, we had the big correction, the ABCD to the downside. And then since May 15th, we've had a pretty good rally. We have not gone into new high grounds but one time, and we missed that ABCD structure by quite a bit. So this could be in a level of consolidation up in here in the IWM. But believe me, one day could change all this, and the way these markets jump around, there's not much to say other than to always be nimble, because they certainly will be. The key to watch this week for key numbers, I believe, are your Treasury bonds. If we get below that 151, folks, to me that means interest rates are going to spike, and that means that the U.S. dollar, if that's going to be the case, should start to strengthen. And we're in very strong support area down around the 78% level in the U.S. dollar at the 94.50 level. We'll put this up so you can take a quick look at it, and you'll see it on a longer term basis where we are. And the amount of retracement now equals exactly what we had in 2016. So those have already lined up, and that lines up with what we've seen in the euro at this 24.90 level. We're trading around 114.67, 114.90 is that key level. We close above that, then the U.S. dollar is most likely getting ready to go lower. But the bonds are telling you that the dollar is getting ready to rally based on the fact that interest rates should be going higher. And if interest rates go higher, that means people bring money into the United States to buy the Treasury bonds. And when the dollar is weak like it is now, they get a better value. And the euro is high, so they have to pay more. So that's, by the way, Tom O'Brien had an interesting thing on Friday, the fact that the euro, well, if you price the Dow Jones Industrial and the price of the euro, it isn't even close to a new high. And that's mainly because the euro has, had a big break compared to the other currencies. So we'll take a little break here, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've been asked to review what happened in 2007. This is what I featured in the newsletter this week because I wanted to show the pattern that was going on with the Bradley back in October 2007. Of course, that's when Mr. Bernanke said all lights are green. It didn't see any possibility of any problems anywhere. And then, of course, we had the too big to fail thing that occurred in March of 2009. What's interesting here is if you notice what that Bradley model did, and I'm going to put the 2009 chart up that goes back and looks at the rest of this stuff that we've looked at over the past few years. But this was probably the easiest bottom that I have seen since 1982. But this one was even bigger because at this particular point, if we look at this, what the Bradley model was doing at that time, it was showing a bottom right around the March 5th. We had a real tight conglomeration of planets at that time. There were all 5 of them within 2 houses, 6 of them within 2 houses. And if you notice that the Bradley was coming down, and that was a beautiful 3 drive to a pattern. That number that we had on March 5th also was a 61% retracement of the low from back in 1987. So it was a very, very important number to look at. And it was this is when the Dow was at 64, and the S&P was right around the 666s. So we've had a tremendous rally since that time. The reason why I'm putting this up is to show you that the Bradley model is not perfect, but it does a pretty good job. Now, if we look at the patterns that were happening, if we look at the weekly pattern in the S&P going back to 1987, you're going to see very similar patterns to what we have going on right now. You'll see the ABCD pattern is perfectly up to this new high that we made in October. And then, of course, we went from 157, down to the 66 level over a period of the last of the last few years. So those are just some of the things. And the reason why I try to put these cycles together is to show you what the Bradley looks like coming into today with the Dow Jones, looking at this 3 drive to a top pattern that we're having in the Dow Jones Industrial Average. That is a 3 drive to a top pattern that has taken well over 3 weeks to complete, which is what you'd like to see. Here again, I'm assuming that the Bradley model is just off by, maybe 10 days. I don't know, but I'm just assuming this, of course. That's all I'm doing. But if we look at that, you'll notice that that is a completed pattern, and we're seeing the same thing in the SPY. We'll just put this up here and let you take a look at it, because we're seeing the same type of pattern here, and we're also seeing it in the New York Stock Exchange Index, and we'll get this one up here next to let you take a look at it, and you'll see that all of these patterns are coming to a head as of this week, and this should be a pretty big week. Remember, we will have Norm Winsky on the 20th. That'll be Thursday, and we'll see what's happening. By the way, folks, send some white light out. We have 2 members of our den have parents that are in very bad times. It looks like it could be near the end, so send out some white light for 2 of our parents here in the TFNN family, to give them a little prayer, because that always helps building some of that stuff in here. All right, let's move on to one other thing that we wanted to go over. Bitcoin, I believe. I don't think I didn't publish this. This is someone asked the question about it. So folks, I don't know diddly squat about Bitcoin. So I just want to show you the pattern. The high on this thing was at 3,200. And from there, we broke down. Then you saw the 3. You see the 2 lower highs. Those were nice retracements. Right now, we're in an ABCD structure right around this 118, 17. At 1800 versus 1700, that is a retracement level. It's also an ABCD pattern. So if Bitcoin is got any legs at all, it should hold this 17 to 1800 level. And believe me, I don't know anything about trading it. The only thing I'm putting it up here is to show you that there's enough people interested in it that it gives you a pretty good chart. I don't know where it's traded. I don't need to know, and I just someone asked me the question, so I posted the chart. It has not been split. That is just the fact that the market has reacted. I mean, when it goes from to 300 to 30, what was it, 30 to 250, you should be expecting to see. So it has held that 1800 level. So it's Mr. Z is telling us that it's trading at 2,000 last. So that 1800 was an ABCD pattern, and it was a 50% retracement of the last move that it started from, which was way back around the 800 or 900 level as I looked at that. So we'll keep an eye on that. We've been asked to take a look at the wheat market, and I'll bring this up here to let you take a look at it. I'm still friendly to wheat. We'll have Simon Lee on at the break here, but if we take a look at the wheat, this is very interesting because this is the first major ABCD pattern that we've had since the market shot up. And if you'll watch it closely there, it stopped exactly to the exact ticket last night at the 61% retracement at this 526 level. We rallied up to about 534, so it's rallied about $400 so far this morning. But it's important that it holds that level, because if it doesn't, then you're looking at some more of a serious correction. But I don't believe that the market is yes, Friday was the time to buy it, of course, Mike, because that's when the pattern completed. But what you want to watch all of these grains, because the weather market for the beans and stuff really doesn't start until August 1st. That's when the pollination really hits the bean market. Last week in July and the first 3 weeks in August, that's when the bean crop is made. Corn's a little bit differently, but that's we want to watch that one very closely too. If you get the 24/7 newsletter, you'll see all of the commodities in there, because I do Minneapolis wheat and show you that the strength of the Minneapolis is also in that area. Also, it's still very strong. It's just backed off a little bit. Now, the only thing that goes up straight forever is the Dow Jones, the NASDAQ, and the S&P, and the New York Stock Exchange Index, and all stocks. These are the only ones that will go up forever and will never have a correction. This will be the time that Mr. Newton will turn in his Illuminati pin and his and his other secret society pins and say, oh, maybe this gravity thing is not over with. Folks, it's probably going to be over this week just because of the fact that everybody is so bullish, and the fact that this VIX has made absolute no, and they're actually telling you that it has no value anymore. That was what the Bloomberg report was saying. So you can see what's going on. Anyway, we'll watch this as we look through some of these things. But we will have Cy Monley on, hopefully at the break. The only way we won't have him is if he's really busy this morning. Then he's not going to be able to do it. But as of about 15 minutes ago, we were all ready to go. So we'll see if that's going to be the case. By the way, in case you missed it yesterday was National Ice Cream Day. I hope you enjoyed it with your families, especially if you have grandkids that like ice cream, and mine certainly do. But I didn't know they had a day for ice cream. I guess they have a day from everything else, but who knows? Okay. Well, there's a lot of information about Bitcoin, but boy, folks, too much other stuff to worry about and to trade. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were going to have Cy Monley from Sylvius Financial this morning, but he's just swamped. and he's afraid that he can't get away for the 25 minutes. And believe me, he's really busy this time of the morning because it's the opening, and he has a lot of people that he needs to contact. Folks, we need to talk a little bit about silver and gold. I really think they've got legs here. All I'm waiting for now is to see if we can get gold to clear the 1236 level. If we take a look here at this long-term daily chart in silver, you'll notice that big ABCD leg that we were looking at last week at 1512 has come in. We're now trading $1 an ounce. Let's try it again. Yeah, it's right, $1 an ounce from 14.12 to 16.12. That's a very, very strong sign that we bottomed here. We had two ABCD patterns coming into that level, had a 1.27 expansion, and the gold was actually much stronger. As you can see by the gold line here, gold was much, much stronger. We were looking for gold to get to the, hold on one second here. I'm trying to get another thing on here. Okay, this way. I don't understand. The question is, why is 1236 the key? That would be more than the harmonic number going up, because the harmonic number going up is 34. It's right at 36 or 37, so we need to get it above that 1236, 1237. Silver has already done it. But we've not done it yet in the gold. So really need gold to get a probably 1237, 1238 to be safe. But if it gets above that, then I would think that it's got a pretty good chance of moving it up higher. I felt this morning it had a chance to go higher. We couldn't get any lower than 1228 last night, and we've had a little bit of a bounce, but nothing to really to write home about. But there's a really good chance that silver has made a pretty good bottom. And if we look at gold, you remember in the gold, well, let's get this thing up here. If you remember the gold market last week, we really wanted to get down to that 1195 level, which would have been down equal to what we did last June. But we only got to the 1203 level, and now if we can get above this 1237, 1238, and I believe, and I don't know if that's a magic number or not, folks. I'm just looking at it from a situation that if I were to buy it there in a breakout, the most I'd have to be risking is the last low that we had, which is 1232. So you could trade gold for $5. You're looking at a contract that's worth $123,000. So if you can trade that for $500, that's really good risk to reward. So watch it. It's going to be interesting because there's a real all we need here, folks, to get the gold people moving is to see about a $15 or $20 move to the upside, and this thing is going to be off to the races. And I don't know if it's related to everything else that's going on in the world or not. I don't know. But I feel very strongly that these Treasury bonds are getting ready to spike to the downside. Interest rates are going to go higher. I've got completion in all the patterns in the stock market, with the exception of the NASDAQ. Hasn't made a double top yet. And, that's only minutes away in that market sometimes. So we'll just have to keep an eye on it this week because this is going to be a key week. If you remember the chart from last week, from Bill Meridian, that was a summation of all the cycles that end in 7, in years of 7, and you'll notice that we're over that zone right now in the middle of January. I think it stretched from the 11th to the 20th, as I recall, and of course we do have a new moon coming in on the 23rd of July, which will be in about a week from tomorrow. So we'll watch that one very, very closely also. But these patterns, nothing goes up forever, with the exception of stocks, of course. But when it does turn down, it's going to be worse than it was in 2007. That much I feel absolutely strongly about. There's no question about it. Now let's take a quick look at the crude oil market because that's another one. Oh, before I do that, I wanted to show you, this is the one that we mentioned in the last week. Was the 135 pattern in the British pound. That had a big move, and if you notice when we got up to that level, this is the pound versus the Swiss. You notice that the pound started to weaken, and that's what pushed it down today. And that's mainly because, folks, the pound has hit that 130 level that has been such a really powerful level, 131 level. That's the 382 level of the whole move down from the Brexit move. So this is why this is such an important number here in the pound. So watch that 131 level in the dollar pound, because if we do close above that, that's going to change the whole scenario as far as being a move to the downside. That's the key, that I'm watching anyway from the currency's point of view. And the euro is in a long-term chart on the euro. And the reason why I put this up on the monthly is just to show you what a tight range we've been in here in the euro over the past year. And, been down from 103 up to, hold on a second, up to the 114 level, and that's what's held it so far. We needed to close above that 115, 10 or something like that, and then I would say this is a valid breakout. But we're up 8 days in a row, which in itself is an outlier event, meaning the market is very oversold. So I would be expecting a pullback in the market for the euro to see what it's going to pull back to. Crude oil is really interesting, folks, because let's just show you what's happening in crude oil on a daily basis here. You'll take a look at it, because we're trying to break out of this level here at the 47.50 level. We haven't quite done that yet. We got up to 46.90 last night, didn't do very much, but we're already seeing breakouts, folks, in the heating oil and also in gasoline. If you take a look at the gasoline contract here, I mean, this thing is already off to the races. I mean, this has been the strongest of the one, and you can see that because on the pullback, it can only do a 38% pullback when we pull back 62% in the crude oil. So this has been the strongest one, and we've got another 6 cents higher, and you run into some pretty strong resistance here in the crude oil. The same thing is true if you take a look at the heating oil market, and this will be the one that also shows you that we've taken out the highs of last week, and we are started to move a little higher. Now, crude oil is the leader of the pack, and it has not broken out yet. So what you'd want to be watching now is to watch for pullbacks in the crude oil that's similar to what we've had in the past. And the past have all been around between 80 cents a barrel and $1.20 a barrel. So watch for a correction, which would take us from 46.90 down to about 45.20. I'm going to say 45.70. And that would be your 120-point correction. So that would be a spot where you should find some very strong support in the August crude at that 45.70 level. We're trading around 46.40 right now. So we'll watch it very, very closely. Someone's asked a question about buying breakouts. Folks, I write my checks directly into the Chicago Mercantile Exchange whenever I feel like doing that, because I just don't have a lot of good information buying breakouts. Some of them work, some of them don't. That's like everything else. If you can manage your risk and they work for you, by the way, go for it, because it does work when they work, and they work pretty good. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I'm going to expand on that question that someone asked me a little earlier about buying breakouts. A breakout is when the market exceeds previous ranges. If many of you have heard of the turtles that Rich Dennis worked on back 30-some years ago, it was based on a 4-week breakout period. Now, the master of breakout stuff and the master of that kind of analysis was done at Commodity Corporation, mainly because of the work of Amos Hofstadter, and they did all kinds of studies based on breakouts of Keltner bands, and then of course John Bollinger named them Bollinger bands. Are the same thing. They're just standard deviations from the mean. But what really turned the corner for Commodity Corporation was the trigger mechanism when these break out, and the trigger mechanism for the breakout was a wide thrust. In other words, if you had a thrust that was 3 times the average true range of the last few days, that was telling you that there was a lot of buying or a lot of selling coming into the market. Now, all of these parameters were kept secret, but that's how they were developed. They were developed over a period of time and testing it a lot, and then they ran it for 25 years with real money and never had a losing year. And that's what Goldman Sachs paid a lot of money for 20 years ago when they bought Commodity Corporation. They basically wanted that program, from what I understood, and I knew some people at Goldman at the time, so who knows whether that's correct or not, but we'll watch it very, very closely. I wanted to mention to you why these, when we talk about these Treasury bonds, I'm going to switch over to notes for just a second here. So we take a look here with the notes. You'll notice that the notes rallied up to the 50% level. The Treasury bonds, which are 1/6 the volume and open interest of the Treasury notes, could barely make the 382. In fact, they missed it by about 8 ticks. Now, if this market turns down from here now and breaks out to the downside from the lows that we made on July 10th, that is going to be high translation to the left. In other words, the cycle crested early, and now it's going to go down for probably several weeks, because we were up for 8 days, and it should go down for at least 3 more weeks if that is the case, if this is truly what's going to happen. But for this to happen, we must take out the 151 level in the Treasury bonds. If we do that, then this would be a situation where you have a high translation to the left, and you'd be expecting to see the market come down strong into this is the 17th of July. So somewhere around the eclipse, around the 14th of August, would be where I'd expect to see these bonds bottoming if, in fact, this low does get taken out at 151. But remember, nothing really happens in these bonds until we break below the 151 level. Right now we're trading at 152.17. We're down about one handle from the high last night, but we need to go at least 1.5 handles lower in order to trick this out. So keep in mind that that's what you're watching when you're looking at some of these things, because they're very, very important to have a handle as you look at it, because they've got to get below 151. That's the bottom line. Otherwise you're not breaking that cycle low and it doesn't mean anything. That's the main thing to keep a close eye on. Now, we did take out 1235 now in the gold. I'm looking, probably the number is going to be right around 1237, 1238. If we break out above that, then I would say, yep, this looks like a pretty substantial breakout. And we'll see whether it's going to have legs or not, but it needs to get above that. And the reason why is that's more than the harmonic number. Harmonic number in gold is 34. The low was 03. That takes us to 1237. If we get above that, that's telling you that it's going to have a lot more power, just like it did on the downside. Once it was breaking faster to the downside, that was telling you that's most probably what you would be watching to see if it's going to be looking at that level. So that's what I hope you grasp from this dissertation on the gold and then also on the Treasury bonds. Breakout strategies will work good, but the key is you have to be able to handle your breakout management risk. In other words, if the market, here's a perfect example. If the gold breaks out at 1238, let's say you buy it at 1238, the low today has been 1232 intraday. In other words, we were 1229 at one time. So from 1238 to say 1232, that's a $6 move. If it's really good, it's going to attract a lot of buying around the 1238 level, and it should take off right away. And if it doesn't, those are the ones that worry me the most, and that's when I usually tighten my stops up to try to protect myself if I'm looking at that particular thing. This is why it's easier for me to buy a point D of an ABCD pattern or a 1-3-5 pattern or a 3-drive pattern, because I have 5 things that I can measure. On a breakout trade, you only have one, and that's what the breakout level is. And so that's why it's difficult, and that's why I don't do it. So sometimes you'll watch it and you'll see it very closely, but other times it's a little more difficult to look at. But I think this gold analysis is pretty much spot on at this 1238 level. If we get above that, I would expect it to really start to go, and that would give it a lot of legs. But right now, the bias is certainly to the upside today. And, watch for a $3 or $4 correction. You could move down $2, $3, $4 in a $100,000 contract. That's still a tradable situation, because it trades very, very fluidly. My goodness. By the way, speaking of fluidly, and since we're talking about crude oil just a little while ago, we just made a 61% retracement of the overnight range from 690 down to 46.25. We just rallied back to the 61% retracement level. And here again, we need this one to get above the 47 level. And then I would think we're getting ready to see the breakout. We've already seen the breakout in the heating oil, and we've already seen breakouts in gasoline futures. Now, if the crude oil doesn't break out, then this could be a pretty significant divergence. But that's not what we're looking at right now. What we're looking at now is just shorter term trends here to look at. Okay, we got a little bit of strength here. The NASDAQ is starting to keep the market up like it usually does, and the rest of these are looking relatively docile compared to the other ones. The resistance in the S&P, folks, is at 2463, I believe, 2463 in the S&P, and in the NASDAQ it is 5875 in the E-mini NASDAQ. That's what I'm looking at. The FANG stocks have been moving this market quite a bit. a bit because of the NASDAQ. But frankly, folks, that NASDAQ really surprised me after breaking, as much as it broke, those 250-point drops. And for it to come back and get almost all of it back really surprised me. But if it's in the context of where we stand with all these other cycles, maybe that's right. But we're seeing major topping patterns in the indices, the NASDAQ, or not the NASDAQ, but the S&P, the Dow Jones, the IWM, and the Dow Jones, and New York Stock Exchange Index. All of them have three drive patterns to the top. All of them do. So that in itself is a pretty big thing. We'll take a break here. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone asked me what was the most important chart this week, and I would have to say it would be this one right here. This is the reverse VIX, the XIV, and as you can see, it's completing a perfect pattern. And this goes back a long time, so keep an eye on this. This is a beautiful ABCD. All the ratios are there. The time sequence is absolutely perfect. The AB equals CD is perfect. So it's going to be very, very interesting. In fact, we made, as we mentioned in the show, we made new all-time lows in the VIX, never to be seen before, and maybe they're going to be looking lower yet, but we'll see. This is going to be, that's what I think is the most interesting of any of the charts that I've seen, and I have never seen that chart before, XIV. That comes from our good friend Jim Bartleone, but it is the reverse index. So that's the one that I would be watching the closest, because that's the exact opposite of what we had. If you'll take a look, if you look at this 3-drive pattern that we had back in 2009 on the Dow Jones Industrial, you'll notice it had a perfect 3-drive ending at 64, 64. That was within about 12 points, Dow points, exact. Of the exact low from 1987. So this is a very important pattern that we're watching here in the VIX index, and we'll see if it's going. Yes, I noticed that Martin Landau passed away. I did not know him. I knew several people from the Mission Impossible show, but I didn't know Martin Landau very much. By the way, we did lose 10 people here in Arizona yesterday with a flash flood. They were swimming in a swimming hole just north of Phoenix, and a torrential downpour came down the stream and washed them all away. That's how quickly it happens here in the desert when these monsoons come. It's just a giant wall of water that just sneaks up on you, and sometimes it makes a noise, sometimes it doesn't, but it caught them by surprise, so we need some white light for those folks too. The other thing we want to watch, folks, is to keep an eye on these Treasury bonds, because if we go below that 111 this week, 151, it's going to be very bearish. Have a wonderful day and live every day in an attitude of gratitude.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.